Hey folks, Dan Frio here, the Mortgage Update. And today is March 5th, 2020. So let's get at it. What do we see today? Well, the coronavirus is starting to play havoc on the economy. I'm going to show you why we shouldn't look at past data of like last quarter's GDP and a whole bunch of other things. We should only maybe focus on just the last maybe 30 days because that's when the coronavirus kind of started kicking in. So let's go over that information. And then what all this information or the bad news is doing or helping in the housing market. So let's get to it. There is some data here. Hold on one second. We will go over my news briefings for the day like I said I promised you I would do. So let's go. What happened when the market started? Well, we had initial jobless claims, and it was 216,000. So these are people filing for new claims. It was a decrease in 3,000. So really nothing there. Okay, nothing there. Now let's start watching. So the next thing that came out, and now the layoffs for February were 56,000 layoffs in February. Now we're starting to see it. Okay, now we're starting to see it. So what this is going to do, I don't know. I truly don't know, and if anybody tells you what exactly is going to happen, everybody has an opinion, but nobody knows. That's why I said we got to throw out the past data, like last quarter's GDP, what manufacturing did in January. It doesn't matter. We need to take the data basically in the last maybe 30 days, and now take that forward to see what's happening really out there in the world. Okay, so let's go through the rest of the data here. The stock market at that point started to really crash, down 743. You can see mortgage-backed securities were up 27, and then all of a sudden we start giving that back after a review. It was up 27 still here. The Dow still down 750, and then S&P broke the 200-day moving average, and then everything kind of went haywire, and then all of a sudden the MBS market started to drop. Remember, it was up 27, now it's down 13, and we ended the day up 9. This might be complete gibberish if you don't know what I'm talking about, and I'm going to explain that here in a minute. But the good news about a lot of this is what? Well, a lot of people, their safe haven is going into real estate. They're buying real estate as a safe haven to all this. Basically, rates are phenomenal. In the long term, we're going to look at it. In the long term, you can buy housing at probably the lowest financing rates that I've seen in 32 years of doing this. So what's that starting to create? Well, it's starting to create a refi boom. We were already busy with refinance. People were getting comfortable with their jobs. The housing prices were stabilized and increasing. People were no longer underwater on their homes. They started doing rehab to their homes, started paying off some bills that from the equity that they had in their homes. And then all of a sudden, we hit these record low historic rates, and that even multiplied the factors. The unfortunate part about it is, a lot of the mortgage companies at this point and banks are at the point they're saying, rates are as low as we're going to take them. Few reasons. There's profit margins. So there's a cost of money, a cost of doing business, cost for profits, and so forth. You got to look at it. You're getting money for 30 years. It's never been cheaper. Plus, you write off the interest. So it's a win-win-win-win-win for consumers. The tough thing is the banks are doing a lot of work for very minimal profit. Everybody was kind of competing against each other, cutting their cost, or not cutting their cost, cutting their margins. And now it's at a point where all the lenders are saying, we can't go any lower. We can't because we have fixed costs that we at least have to make X amount of profit to stay in business. So really in the last week, we haven't really seen much change in rates. So let me go over what I'm talking about here. For those new to the channel, and I forgot to tell this, or explain this yesterday, is, for those newbies, I try to put a little comment in there to explain to the new people that are coming on board. And we got, thank you. We got probably 20, 30 new subscribers a day, and we're getting a couple thousand views. So I greatly appreciate that. So what we follow here is I'll tell you who I am. My name is Dan Frio, the Mortgage Update. I am a mortgage advisor, have been for 32 years. I'm located in Chicago, Illinois. I am on 2 radio stations in Chicago. One is a Christian station that I've been on for 13 years. I have a show every night from 7:30 to 8 p.m. The other one is WIND. It's one of the biggest talk radio stations in Chicago. I have a radio show there on Saturday mornings from 7 to 8 a.m. And that's what I do. And then I take all that data and I YouTube it and I podcast it and I put it all over the place. And I'm trying to educate people. That's it. If you use me, I hope you use me. If you don't, at least I'm trying to educate people. What I'm asking right now is almost everybody that has a house is refinancing. Get a first opinion or a second opinion or a third opinion. I am probably getting at least 20 what we call loan estimates a day. That is what you get when you're refinancing. You are required by the lender to get what's called a loan estimate. And that goes through your rate and your fees. So what we want to do is I always tell my clients and I tell the viewers and I tell people on the radio, don't be wowed over the rate. Yes, you want the lowest rate you can. However, I'm seeing people paying, and I don't think they really realize they're doing this. It's kind of in there, watch for this keyword. There is no money out of pocket, or your out-of-pocket expenses are only X. I don't care what your out-of-pocket expenses are. How much is being financed? If you owe $200,000 on your mortgage, but you finance $210,000, where did that $10,000 go? Is that costs? So pay attention to the costs as well. I probably get 20 applications or loan estimates a day. I bet you 80% of the time we're beating the competition. And they're adding up day after day after day as people see what I'm doing. I can't really show you. What I'll try to do tomorrow is I'll get a couple of them and blur out the names so you don't see the addresses and the names. And I'll show you what my counters on a lot of those. Like I got one yesterday I think it was, and they're getting a 3.5 rate and it was about $8,000 in fees. I got them 3.375 with $2,100 in total costs. So not a huge savings in the rate. It's still a savings. But I saved you, $6,000 in that case. So I hope those numbers add up. I'm getting dings on my phone because people are requesting my assistance right now, and it's 6:30 my time here. So what I follow here is I follow this for my clients. And again, this whole channel is to educate you. We follow this number right here, and you'll see UMBS. Basically, it's the mortgage-backed securities market. This is what dictates or determines mortgage rates. It's a bond that trades on Wall Street, and the yields create the mortgage rate. Okay, so this is what we follow. We do not follow the 10-year Treasury or the 2-year Treasury or the 30-year Treasury. It has nothing to do with your mortgage. And if your mortgage person, if you ask them saying, you know what did mortgage or the mortgage rates do today, and how do you know? They're probably, I would almost bet you that they're going to say, well, the U.S. Treasury is down, or the 10-year Treasury note, and they want to sound like they know what they're talking about. They're going to say, well, the 10-year Treasury is down to the lowest point ever. It's down 7 ticks. And that sounds impressive to you, but counter and ask them what the MBS markets do today, because that's what determines mortgage rates, and you'll probably get a deer in the headlights, because 99% of the people don't have a clue what this is, and that's a shame. So you're paying, hopefully you're using that person for a purpose. You just didn't go online and go and try to find a mortgage company out there that again, you don't even know who they are, or you might know the name but you have no clue who you're working with. So here's what we do. Let me look at the overview. We follow this market, and let's see what the trends are doing right now. So we got an uptick of 9. Okay, as this ticks up, this is the price people pay for a bond. It is up 9/30 seconds. So let's just scrap that for a second. You don't have to really know that part of it, but it's up. So that means the price is up. You've had to pay more for that bond offering. So the more you pay for a bond, the less the yield is on that bond investment. Okay, that's just how it works. The lower or less you pay for a bond, the higher the yield or rate of return you're going to get. The higher you pay or the more money you pay for a bond, the less the yield or rate of return is going to be. So that's what dictates mortgage rates. So we like when this goes up, and it's been skyrocketing. If you just go over the past, let's go back here, December. Look at this trend line. If this was a stock, this thing would have quadrupled in price over the term of the loan, okay? So you're going to hear me on here all the time saying pigs get fat, hogs get slaughtered. So nothing goes up in a straight line. It's eventually going to take a turn. The coronavirus is playing havoc on the markets. And then you saw the Fed step in earlier in the week, and they did an emergency rate cut. That has nothing to do with mortgage rates. Nothing, period, nothing. It is the federal funds rate. Watch my video from yesterday, and you'll find out. I explained to you, go over the definition, what the Federal Reserve does, what they control, and what the federal funds rate is. It has nothing to do with fixed rate mortgages. Now it can, or it may, play a part in home equity loans, in credit cards, in shorter term investments. Because what happens is usually the Federal Reserve reduces the federal funds rate, and then the banks in turn around and reduce the prime rate. Then the prime rate is what's factored into home equity loans and a whole bunch of other things. So that being said, we love when this goes up. So as this goes up, rates come down. Rates are 1.125 lower today than they were 365 days ago. So 1 year ago today. So if you took out a mortgage a year ago, year and a half ago, 2 years ago, so between 1 and 2 years ago, you got to do something. You have to. Check everywhere you can. Reach out to me. And I'd love to give you a quote. So if you're in the process now, let me know. Send me the loan estimate. I'll go over it and get back with you probably within a half hour and say, here's what I can or can't do. I might say, God bless you, take it, sign on the dotted line, and move on, because that is the best rate in the whole wide world. 80% of the time, I'm coming back saying, you know what, I can save you on rate and fees. So that's what's normally happening right now. If you're not in the process yet and you want to try, send me a copy of your mortgage statement and just give me your contact information. It is not a hard sell. I'll call you. I'm just like I call you. I'm talking to you now. I'm just going to call you up and say, hey, Mr. Smith, you know, how much do you think your house is worth? I know that now. I know how much you owe because I got your mortgage statement. I know what your rate is. And then I'm going to say, you know what, do you have any idea what your credit score is? If you don't, and I'll let you know out there, if you do not, I created a website called creditscoresandmore.com. It's plural, creditscoresandmore.com. Go there, complete step 1. It's a free credit score system. Let me know what that score is, and that's what I'll base everything on at the time. I'll get back with you and say, okay, great news. You're at 4.875 right now. I can get you 3.25. You're going to save $387 a month. Or why don't we do this? You have 25 years left on your term. How about if we did a 20-year term? Cut 5 years off. I did that with a person today. His payment goes up $33, but we save him 5 years. We'll pay off the house 5 years early. When we netted out everything, and I guess you're going to say, oh, I paid $33 more for that 15-year mortgage that you took, or 20-year mortgage you took. I add that in, and then I subtract out how many months we saved you. He was saving $50,343 net. No-brainer. Why not do it? Even if the fees are $1,000 or $2,000, over the long haul, you're going to save over $50,000 in interest. So, how do you get a hold of me? I'd love you to reach out. My website is down. It's probably going to be down until Monday. We are revamping everything. We rebranded our name to Preferred Rate. We're going to have apps for your phone. You can just do everything on there. You can correspond with me online. The website's going to be fantastic. You'll be live feeded through the system. It's going to be unbelievable. And that should be up probably Monday, Tuesday. I'll let you know when that comes up. But call me at 844-775-LOAN. That's 844-775-LOAN. Soon as the phone answers, press 1, and you'll go to me. If I'm on the phone, you're going to go to my assistant, and I promise you we'll take care of you. I'm always in the background. I'm working on things. I'll probably call you, thank you. I'll probably shoot you an email, thank you. I am involved in this. I promise you. No matter who you get on my team, I am involved. So give me a call, or you can reach me. I'm changing my email address, and don't laugh. My friends are laughing at me. My email address right now is Danny, DANNY, dot Frio, which is FRIO, at preferredrate.com. Yes, Danny. Try to get it to change to dfrio at preferredrate.com, but right now it's danny.frio. Don't go to the website just today, but if you're watching this after probably March 10th or 15th, go to thefrioteam.com. Check out everything you can about me. That's what I always say. Look and find out who you're dealing with. Google the mortgage update with Dan Frio. You're going to see 5-6 pages of my podcast, my YouTube, my radio stations, my events, my Facebooks, my LinkedIns, everything you can about me. I hope you like what you see. So, thank you for your time. If you got any questions, please leave comments down below. I answer every question. Go back through all my videos. You can see I've answered every question. Give me a thumbs up if you would. Please help share. Share this because I know somebody you know needs help one way or another, or at least pass the word out because so they don't get taken advantage of. I want to save you on rates, and I want to save you specifically on your fees. And like I said, the client I just worked on just a little bit ago, we're saving $50,000 in interest. Think about that, $50,000. So God bless. Thank you for watching. Come back tomorrow, same time, same place. See you then.